What are you watching to tell you when you think we're at that point? Ron, you first.
I think there's no rush to get into anything right now. I'm watching the credit markets very closely to see signs of further dislocations there, like we saw yesterday. If that were to rear its ugly head again, there could be another leg down in other assets because you get forced liquidation, and that's problematic.
Brad?
I think we're getting close to a bottom. We're getting close to max fear. You know, we have the president declaring a national emergency. We have Tom Hanks and his wife, for goodness sake. We have all of the major sports leagues canceling. There's just not that much fear left to get out. I think the markets are going to reflect that.
Okay, I've got a question on that, but let me get to Mark first and your thoughts on that, Mark.
Yeah, so, typically these bear markets don't end until there's a significant casualty, and we haven't seen that yet. Maybe it's one of the energy companies because they're all really getting pummeled. Not a lot of them can make money under $50 a barrel, so maybe we need to see one of those casualties, unfortunately, in order for us to feel like now it's actually bottoming. And we definitely need to get some clarity on this coronavirus situation.
Brad, what about that? And don't forget, we have yet to hear from any company as far as the impact that the coronavirus is having on their earnings. We won't get that for another 3 weeks when the season begins, and hopefully we get some guidance at that point. But isn't it possible that any bad news that comes from them could be another excuse to send this market down another leg?
It certainly could, but when you look at a little bit longer term, what's going to matter is consumer confidence. And the consumer confidence, we haven't seen it get hit that badly. If actually things turn out not to be bad, because we're pricing in the end of the world with the news we're getting, I think it will get a positive reaction.
Well, I don't think we're pricing in the end of the world, down 28%. I mean, if you go back to the financial crisis of 2008, the Dow went down 50%, banks went down 90%. If you go back to 1929, the market went down 90% as a whole. So that's pricing in the end of the world. This is not that thing.
Although there are some stock, I mean, talk about 90%. AMC Entertainment was a $30 stock in 2017. It's under $3 right now. So if you were to use the analogy of the hardest hit, parts of this.
Sure. Oh, and the oil sector as well is down 65, 70%. But having said that, we are in a recession. So the market is pricing that in concurrently with it happening. It's not a leading indicator right now. It's a coincident indicator.
Very quickly, Mark, I mean, you point out we could get a company blow up of some kind, but isn't that what they're hoping to get from the federal government to keep that from happening?
Yeah, but I mean, is the federal government going to bail everybody out? I mean, there's so many industries that are in trouble. You've got energy, you've got cruise lines, airlines, right? There's just so many industries. And what about the small businesses?
Right.
These little mom and pop shops, the ice cream store, if nobody comes in to get ice cream for the next 30 days, they're done. They're closing up shop and they're firing 3 employees.